IBM.
By the way, IBM might be one of my favorite picks of earnings season this year. And quantum computing, two words, those are the only words you need to care about right now when it comes to the future of AI. Speaking of IBM, we got some numbers to look at. We got EPS coming in at $2.38 expected, which is 10% year over year. Revenue at 16.7 billion, 4.5% year over year. Free cash flow is looking at 3.3 billion. AI and consulting revenue, key segments to watch. Think of IBM as the Dow of AI, basically. Like no one thinks the Dow's sexy. Your grandpa invests in it. And unless you're over the age of 50, you don't understand the relevance of IBM in the computing space world. However, I'm a nerd with no friends, so I do. The reason why IBM's significant is these $25,000 computers and laptops that they were producing, it wasn't to sell to me and you, it was to sell to other organizations so they can come out, make them sexier, make them sleeker, make them consumer friendly. And that is IBM's idea, is they create the things that traditional computer companies, Dell, HP, etc., are afraid to make because they're not willing to risk the market share. IBM, however, they have the legacy customers, they have the free cash flow, they have the R&D, so they're going to go ahead and do that stuff. Another thing, Red Hat hybrid cloud. It's in focus because they made that acquisition about a year ago. Again, our 12 to 18th month rule, Red Hat should start showing some type of return. Risk here is margins under pressure from consulting softness because they're probably going under on their consulting fees to drive more volume versus getting pounded out on competitiveness. And Zach's rank is giving it a number 3, which is a hold, meaning if you had bought in a while ago, just hold on to it. Don't worry about it. Now, what's driving this quarter? Quantum computing, like I said, from sci-fi to balance sheet, sort of. IBM is leaning hard into quantum. It's pitching itself as the first mover with plans to build a fault-tolerant quantum computer by 2030, a machine so powerful it makes today's supercomputers look like microwave clocks. Now, why does this matter? Governments are spending billions on quantum. Think of China, EU, and US. Potential national security plus pharma plus energy implication, and IBM is one of the few companies with a commercial system already in the market, as I mentioned earlier. But let's be clear, this is still early stage for now. It's more narrative fuel than actual revenue. Now we also have the Red Hat and hybrid cloud acceleration. IBM's 34 billion, mind you, they spent 34 billion on Red Hat. Their deal was supposed to make them a cloud power. For a while, it underwhelmed, but now it's back in the spotlight with hybrid cloud and automation offerings that feel tailor-made for an AI era. Remember, everything's AI focused, so anything that is going to benefit the AI consumer, the AI contract, that is going to be bullish for that company. Now, they also have AI consulting in agnetic workflows. IBM isn't just building software, it's selling strategy. But consulting is low margin and highly cyclical. If clients are pulling back amid macro fears, this segment will show first. So be on the lookout for that because this is probably one of the first things they'll bring up on their call. They also have free cash flow. It's the dividend lifeline. Let's not forget they still pay a juicy dividend of 4% and it kicks off over 12 billion in annual FCF. That's boomer stock future. But it's also why the company is getting institutional love again. Defensive appeal in volatile markets, supports buybacks and dividend hikes, and it helps justify elevated valuation compared to its historical average. Now, the 5 burning questions: is AI spend growing? What's the monetization plan for quantum in the next 2 years? Are consulting deals slowing due to trade/tariff uncertainty? How sticky is Red Hat's hybrid cloud business? And does IBM raise full year FCF guidance again? Now, their bull case, aka the poop zone, quantum is still 5+ years from a real revenue being out there. Again, look at AI, look at predictive analytics. Consulting slowdown, That's a margin headwind. Tariff trade and worries could delay enterprise spend, by the way. Think EU, China, and valuation getting stretched for a low single-digit grower. So that's why I gave it the $300 price target. I figured it wasn't. I think when I called that, it was at 212 a share. So for me, I was just like, I don't see this thing moving more than like 80, $90 within a year. So that's kind of the deal that we got going on with IBM. It's not sexy, it's not exciting, but I promise you, like Verizon, it pays nice, fat, juicy dividends. And watch the whole camera that it throws out once it finally gets out that quantum computer to not only the general public but its enterprise customers as well.
Very good. I like that. You can see it's kind of been in this upward channel since back in April when we had the tariff tantrums. It's up almost 100% from that low, right? So if you got in down there, man, 80, almost 90% to the highs. Like Max said, aiming for that $300 range. PE ratio 49, so fairly high, but again, this is one of those growth names aiming for the future, especially with what he had to say with quantum computing. We did have this channel that it peaked up above, came back down, and then it went up a bit higher. I would say we're going to probably retest this line probably tomorrow or so. And if earnings are going to be a beat, you can see they generally do beat earnings. They have a few misses every now and then, but I could definitely see this heading back up to retest those all-time highs. If we do see a miss in some sort, then definitely come back into this channel. We do have some resistance at about 269 and 263 would probably be my first targets on the downside. Now, if we take a look and a peek over at our stacks, and take a look at IBM, not too much activity. So the last time that something was actually done for IBM was back on the 16th, so last week. We do have some buying on the 7th earlier in the month. You know, millions and millions, hundreds of millions of dollars being spent. So that could be them positioning them, expecting the long term and the long run in terms of what to expect in IBM.
I will say IBM, you're not going to see a ton of options buying. You will see more share buying, and you will see more long. And if you do see options buying, it's going to be more long term. Again, we're talking about our parents, guys. This is a stock that your mom and dad are currently buying and are excited about. Like how we get excited about GameStop, IBM is their GameStop to a degree. So it's definitely a stock where you're not going to see a ton of options activity. And again, as myself and Eric always mention, this is where it's important to have that thesis. If you have that thesis in place, you can't lose, theoretically. But again, you got to have that thesis in place, be good to go. IBM is definitely more of a share-heavy type of company, so look into the dark pools, look for volume shelves. That's what we're looking for when it comes to a company like IBM.